Hi, welcome to House and Home Chat, Real Estate Real Talk with Dena and Chris. I'm Chris Breitenbach.
And I'm Dena Mathis, and welcome to our program today. We're really excited to bring you not one, but two local experts today. We're featuring Guaranteed Rate Affinity mortgage team here. We've got Bill Nutt and DJ Sessions, and they're going to be talking to us today about the Express Approval Program with Guaranteed Rate and how you can put your best foot forward when you are putting together a purchase contract. There's also a recent trend out there in appraisal gaps. So we're going to really dive deep into that as well and inform our listeners about what that means.
Yeah, so DJ and Bill, thank you for joining us today.
You're welcome.
Hey, in speaking on the lending topic recently, as Dena said, being totally prepared to write your contract is going to give you a competitive advantage. And so that and appraisal gaps specifically hit a hot button with people. So we wanted to take the opportunity to bring in some experts to help shed some light on that, go into it a little bit more in detail for us. But as always, we want to begin by turning it over to the two of you. Just share with us a little bit about yourselves.
Welcome,
Sure.
guys.
Thank you. Appreciate the opportunity to be here this morning. First of all, my name is Bill Nutt. I'm currently a vice president with Guaranteed Rate Affinity. 30 years in the mortgage lending process, primarily in the private banking and high net worth areas, and love the options that we have at Guaranteed Rate Affinity to help our buyers become more competitive in today's market.
Again, DJ Sessions, VP Mortgage Lending at the Guaranteed Rate Affinity. I've been in the industry about 19 years. I love what I do. I'm involved in many organizations throughout the community, and I'm just happy to be here and provide any expertise I can.
Great, thank you.
Thanks.
Well, let's start with what is Approval Express? I realize that's unique to Guaranteed Rate Affinity.
First of all, we have this process at Guaranteed Rate Affinity that is coined Red Arrow Express. And it really gives our buyers, our borrowers, a competitive advantage in today's marketplace.
I see you have a red arrow.
Yeah,
I have a red arrow.
You've got a red arrow. I got it.
So the process really is one step further than a pre-approval. This is actually where the borrower has supplied to us their income documents, their asset documents, their down payment, their work history. And not only do you have my seal of approval on it, Freddie Mac or Fannie Mae's, but you also gain the approval of a real live underwriter, their approval. That pre-approval is good for 90 days, and all it really needs is a property address, and you're good to go. So you go to a potential seller with this Red Arrow Express pre-approval from Guaranteed Rate Affinity, and you're ready to sign a contract. 21 to 28 days later, you've got a closing in place. So that's a little bit about Red Arrow Express.
Yeah, and I'll add it's actually a commitment letter, right? Because it's
correct.
Oh, wow.
The verbiage is actually a little different on the letter, and so when your agents are presenting that, it's like, no, this buyer's actually been approved and not just pre-approved. So that helps you get an advantage over just
Correct.
another pre-approval letter.
That's a huge advantage because when we're competing with cash sales out there and, this really gives your buyers a leg up.
So what would we be looking for? This was one of my questions I had. What would we be looking for in the letter that will differentiate it? Because as in representing a buyer, if I'm sending this letter to another agent, I will not assume that they realize anything. And
Right.
I mean, and that's just
Right.
natural. So, I want to make sure that I can point out, hey, this isn't just your typical pre-approval letter.
Correct.
They have been through underwriting. This is what this is.
Mhm. The pre-approval letter for Red Arrow Express basically has the fact on there that it has received Freddie Mac and or Fannie Mae's approval, and it has been fully underwritten. Your income has been verified, your assets have been verified, your work history has been verified. So those verification points from an underwriter's perspective, they have signed this pre-approval alongside me, the loan originator or loan officer.
Nice. Nice.
Yeah, I got nothing to add. It's
Love this process.
So what do they need to provide to you in order to get the process started?
Typically, when an individual comes to Guaranteed Rate Affinity, they start with our digital mortgage process. Everything is online. They can fill this out in the comfort of their own home, on their laptop, on their iPad, or even on their smartphone. That pre-approval comes to me. The request does. I submit back to them what I'd like to have. Usually it's the rules of 2 years of W-2s, 2 months of pay stubs, and 2 months of bank statements. And that is simply it. From there, we take it to the underwriter, and that starts the formalized pre-approval process.
And I'll add, and then the 2 years of full tax returns for business,
Correct.
Business for self people. And really, I've used the program a couple times for those folks who are coming off the pandemic but still have their business or self-employed, and we just want to make sure that they are solid. I know there was some miscommunication out there in regards to self-employed people, and so taking that extra step and actually getting approved just made everybody feel much better.
Mm-hmm.
Yeah, definitely,
Oh, yeah.
right?
Oh, yeah.
Definitely. I know if we have a listing and somebody's pre-approved, that takes underwriting or their situation out of the equation.
It takes a huge component away of stress away.
So if we're taking some time off from contract to closing, how much time do they need before they can write a purchase contract? How long will it take to get this?
I think it's 10 to 15 days. I mean,
Okay.
Oh, wow. So it can really shorten the process too.
It can.
So that is another added feather in the buyer's cap where they can close and they can compete with some of these other contracts.
Correct.
And close in 10 to 15 days, did you say?
And the only asterisk I'd put there would be the appraisal.
Correct.
Right?
Okay.
Because, you know, the appraisals are busy, right?
Yeah.
And so
Yeah.
the minute I say it'll be done in 10 days, right? The appraiser's like, it's going to take me 20 days to get this report back to you.
Right,
And
right.
we've got the answers for that too.
There you go. Yes,
Right.
we do.
Yeah. Okay, so you go online to Guaranteed Rate Affinity. You're going to click on a button. You're going to get started. Someone's going to tell you what you need, and then you're going to upload all of that. 10 days later, 15 days later, you now have this awesome pre-approval letter that tells the world you've been through underwriting, you're ready to go.
And it's
Correct.
not a pre-approval letter. It's, what are we calling it?
It's a fully
commitment
underwritten
letter.
commitment,
Okay.
only missing the property address
Okay.
and the appraisal.
So that's the only component that's left then, is the
Correct.
actual title work on the property.
And
That's
Dena
all good
and I
stuff.
can handle the address part. finding the
Absolutely.
address.
We can provide that.
And I'll just add only thing, just stay employed.
Stay employed. Don't go.
buy a car.
Don't spend your money.
Don't
spend all that.
Don't go buy a Lamborghini.
The industry definitely likes consistency. So they're looking for consistency in your bank accounts, making sure that a lot of money isn't flowing in and flowing out undocumented. We should see your paychecks automatically deposited, things like that. Large deposits are fine as long as we've got explanations behind them.
That's great. That sounds like a really easy process. And it really, when, you know, those buyers come to us and we're out there competing with 5, 6, 8, 10, 15 other contracts, this really does help you as a buyer get the leg up.
Right.
So
Exactly.
we
exactly.
appreciate this program.
We love it.
And you've made it so clear and easy to understand. So
Yeah.
I definitely appreciate that too.
Good.
And hopefully then all of you will understand when we say, hey, take it that step further. Don't just get pre-approved.
Don't just get pre-approved.
Get fully underwritten
Mhm.
so that we can help you, serve you better.
Yeah. Is there anything else we need to know about that program?
I was going to say, I'll add that a lot of times what happens is that I'll initially pre-approve somebody and then they lose on that first house. And then that's when I'll bring up, hey, while we're waiting, why don't you just go ahead and send me the rest of the stuff?
That's a
That's
great
I'll go ahead
idea.
and get it
Yeah.
approved.
Get it done.
Because, you know, this is a tough process, tough market right now.
So you said it's good for, did you say 90 days?
90 days.
What happens if we don't find a house in that time period?
Our industry basically has a seasoning requirement. Think of it as like a dozen eggs on the grocery store shelf. After 2 weeks, after 2 months, that is expired. So we are going to ask for some supplemental documentation, some updated pay stubs, some updated bank statements. All the other stuff is good. The tax returns, the W-2s, nothing changes there. But we will want to go in and refresh that if we haven't
So
gotten
it's
through the
just
process
The
in 90
updated
days.
information.
Correct.
It's not like you're starting all over again and you gotta start back at square one
Right.
on the computer and upload. You're just providing the
Just a
additional
refresh.
documentation
Refresh.
going
I like
forward.
that word.
I like the
Refresh.
refresh.
I like
That's a good.
Hit the
Refresh.
refresh. All right. Sounds good.
So you mentioned, okay, contracted closing 21 to 28 days, and it is going to be dependent on appraisals.
Correct.
So I think
let's
that's a
move
good
into
segue to
the appraisal piece.
the appraisal piece. We are in this fast-moving markets, and prices in certain areas may or may not be rising very quickly. And so a couple of things I'm seeing is there's not enough appraisers out there. And number two, so a couple of different issues, not enough appraisers out there. And number two, there's
an industry to get into.
There's an industry, and appraisals can be challenging because if somebody sells their house and the next door neighbor lists for $50,000 to $100,000 higher, you know, how is the appraiser justifying that for a bank?
Right,
so
certainly.
That's the kind of where we want to go next with it.
So why don't we just start with maybe even telling our listeners like why an appraisal is necessary?
Yeah, great.
Sure. Basically, the appraiser's job is to represent to the lender what this home is worth. Not from a sales standpoint or sales price standpoint, but from a collateral standpoint. And there are a lot of ways that an appraisal can be completed on a home. Guaranteed Rate Affinity has one process that we utilize a lot, and that's called the Appraisal Waiver process. And that's a grant that Freddie Mac and Fannie Mae have given to us and to some other lenders as well, where they can pass go, collect $200, and you don't have to have an appraisal done on the property. Freddie Mac and Fannie Mae have a confidence level in that house, in that neighborhood, that price is justified or supported. Next, a different type of an appraisal is what we call a desk appraisal, meaning sitting here just like we are today at this desk. We can look at the market data available from historic sales standpoint, and we can determine what that home is worth. An appraiser never needs to step foot on the ground or inside that home.
So a desk appraisal is different than the appraisal waiver.
Correct.
Completely. Okay.
Yep. The third level of appraisal is what we call a drive-by. That's where the appraiser actually goes out, gets out of his or her car, takes a photo of the home, may walk around the home. Since COVID, we have not done a lot of interior inspections. We haven't been required to. So it's a contactless process. And then finally is what we call the full appraisal process. This happens a lot on government loans like FHA and VA loans, where the appraiser has to go through the home, determine its quality, determine its health and safety standards, and they'll take full interior and exterior photos of the property. So those are really the four types of appraisals that we have in our lending.
Can you guys tell me, like, how do we know what type of appraisal is going to be done?
Well, a lot of times it's from the application, because if they're putting a certain amount down, like Bill was mentioning, the system will trigger an actual waiver. And then, like he also mentioned, the type of loan. I know right now we're doing full full interiors on our government loans, right?
Correct.
That's still the case. So if they're doing a government, whether it's VA, FHA, or USDA, they're going to do a full appraisal. So typically,
so those we can count on full appraisals being done.
Conventional, they're putting 20 to 25% down. You can, and then it's in a decent neighborhood with supporting values. You're going to get a trigger appraisal waiver a lot of times.
Wow, well, that's good.
So
I guess
would we potentially know if they
from
do
someone's
this approval
perspective
express? Would we potentially know at that time that there's a good chance it won't be an in-person appraisal evaluation?
We can tell you based on their down payment. Any down payment over 20% is going to qualify them for appraisal waiver eligibility. The property itself, the property address, is going to determine whether they are eligible for that property appraisal waiver. Neighborhoods that are very consistent, cookie cutter, are going to have a higher chance or a higher percentage of that appraisal waiver. Rural properties, probably not. And a lot of times you'll find that condominiums do not.
Interesting.
So those are just two properties that we'll want to be aware of.
Yeah, and I'll add that it's nice too sometimes when you forget about that, but then you run findings and it's, appraisal waiver, and you can kind of give them that exciting news and like, yeah, it's great.
Christmas came early.
So it kind of takes a lot of that out of the big picture. I know we were talking about, some different overages and.
Yeah.
So.
Well, and I have to share, I think one day I happened to be at the office and I have a special computer that I like to work at, and Bill's just right there. And I think you got an appraisal waiver, and it was like Christmas. It was like Christmas. He's like, I can't believe I got an appraisal waiver on this one. This is great. And it makes the process easier.
It's nice to deliver good news. And a lot of time from a listing standpoint, we can tell the agents up front, hey, the property address itself will be eligible for an appraisal waiver. So if you want to market that to your potential buyers, this house will qualify for an appraisal waiver if you have a buyer that's putting 20% down. That's a patented project that Guaranteed Rate Affinity has through Fannie Mae, that we have the ability to look behind the curtains and tell a buyer, this home is eligible for an appraisal waiver.
Wow,
so
that's
great
service. Yeah, that's great information to share with the seller, and also in looking at those competitive contracts that are coming in when the seller's reviewing them, we want to make sure that our best contract may or may not be the price, as we've talked about before, although price is always good, right? But it could potentially be someone that's putting down the 20% or more, so that we have a greater surety of an appraisal waiver.
Correct.
Wow.
Yeah.
Wow.
That's good stuff.
Good information.
For homes that are having appraisals, are you seeing a challenge there with homes appraising?
We're seeing two challenges. One, from a standpoint of the appraiser, quite frankly, getting out to the property. Appraisers' time during the day is limited. Their workloads are never more than they have been right now. The demands on them are greater from a listing standpoint, from a historic sales standpoint. So yes, we are seeing a lot more demands placed on the individual appraiser to support these sales prices that we've seen escalate during 2020 and 2021.
I was going to say that, so this year I'm seeing all over the board where some are coming in short, some are coming right in at the actual sales price, and then they're also seeing some with the gap involved. So there's no consistency, and the waivers. So I'm kind of getting a gamut of all of it.
All over the board.
Yeah.
What happens when they're not appraising?
Renegotiation. That conversation. I call you.
Yeah.
We have that conversation.
True story. I was just sharing. I had that situation happen yesterday, and it really does depend on how badly the buyer wants the property.
Correct.
And how badly the seller wants to sell at what price. So it does, like you said, become a renegotiation. Right now, in a lot of cases, the sellers have the leverage.
Right.
Right. So
one of the things that Dena and I are seeing on the real estate end, and you, I'm sure, are seeing on the lending end, is buyers in their contracts are committing to covering an appraisal gap. Their fee one. And what that means is, if you are buying a home for $300,000 and you have it set up, I'm going to put down X down payment. But if it only appraises for, did I say 300? If it only appraises for 290, there's this extra 10,000 that is either renegotiated, or again, what we're seeing is that buyers will say, hey, I will cover a gap if it doesn't appraise up to X amount. And so that's what we're talking about, an appraisal gap, and what we wanted to kind of get a little bit more into.
And I'll say, I was wanting to hear from you guys, do you guys think that's wise? Because if an appraiser comes out and says, hey, look, I've looked at the comparables, right? I get they want to sell it for 300, but it's only worth 290. And obviously from a lender perspective, we're not lending more than what it's worth.
Right.
So then, is it wise for then someone to say, you know what, I don't care, I'm going to pay $10,000 more for this property, more than what it's worth? And
what's your thought, Dena?
I think that's kind of a loaded question. It really, it's in the eyes of the beholder. It really is up to that buyer to decide whether or not, given their circumstances, right? Do they have to move? How urgent is their move? And what does the inventory look like? What do the alternatives look like? Does this put them out on the street somewhere without a home that they have to rent and they have to store things? And so it really does depend on that seller's motivation, I think. And the
Certainly.
best thing that I think, Chris and I always talk about is, allowing for our clients to make those decisions for
Right.
themselves. We can just put that information in front of them.
Sure.
Is it wise? I don't know. 3 years from now, if they turn around, they, call us and they want to sell and the market's flip-flop, then,
Or even just stabilized.
or
right?
even just
If it's
stabilized. You're not,
then it's
necessarily making money off your home, but
Right.
everybody
that
just has to
livability.
know exactly where we're at right now and make those decisions that are right for themselves.
And Dena, I agree 100% with
Yeah.
you, right? My thought is it's individualized. Same thing with the question of should I get an appraisal when I'm paying cash?
right.
It's individualized.
Yeah.
If you're buying this
Depends.
home and it's going to be
Your
your end all be all
Forever
home,
home, and you
who
don't.
cares?
Yeah.
I care. I always care, but a buyer might not.
Yeah.
Might
Some
not
people, it's not as important.
If you're going to transfer out in 2 years,
Mhm.
I'm going to make sure you understand, hey, that's great, but know that you might not get the value out of it, but what's your livability?
Sure.
Yeah, I don't have that crystal ball. Do you, Bill?
I do not have the crystal
DJ
ball.
has a crystal
No,
ball.
I don't. I like them. But Bill, what were you going to say?
I always say to Chris's example, the $300,000 house that appraises for $290, that's a $10,000 difference. You amortize that over 10 years, you're basically paying $1,000 more per year for 10 years. Now, take that a step further. Is this going to be your end-all house, as you mentioned? 20 years you're going to be there. You paid $10,000 more than what it was appraised for. That's $500 a year for 20 years. So take that into your mindset whenever you're looking at a buyer. What's your hold period here? Is it 3 years? Is it 5 years? Are you living next to your grandchildren? You're going
Yeah.
to be there until they're 30.
Exactly.
Take that into consideration.
And I add that sometimes you send 3 different appraisers out, you're gonna get 3 different values.
Correct.
Right? So, you could have just been the luck of the draw. So
Yeah.
Yeah.
So what happens? Do you often see in this market, are people sending a second appraiser out?
We do have the ability to challenge appraisals. A lot of times the next appraiser is utilizing the same market data that is available to the first appraiser. I will say this, appraisals are very difficult to challenge.
Yep.
In the 15 that I have done in the last probably 5 years, I've probably had the needle moved maybe $5,000 on one out of those 15 appraisals. So
Interesting.
you don't see it happen very often.
I would actually follow it up by saying the same thing. I
Yep.
mean, every time I submit one and it's on the behalf of, hey, I really want to challenge this, I'm like, great, but I've only had like 1 or 2 in the last, 20 or so that have actually come back. So, and I understand that the appraiser, they're looking at, hey, you're essentially challenging what I did all this work
Sure.
for. So,
Right.
Yeah, and maybe this is an appraiser question, but there has to be some sort of something built in for the fact that, we're establishing new high comps,
Correct.
Yeah.
Right.
So
And buyers want the house.
buyers want
They
the
want
house,
right?
and we are at a place in the market where we are establishing new high comps, and there is competition. So anyway, all those things are a factor, aren't they?
So how does the buyer cover a gap? So, we 290 appraisal, 300,000 is the purchase price. What happens for the buyers from the buyer's perspective?
The buyers either have or don't have options. First of all, ones that have the reserves or have the option to find the reserves from a family member or 401k or retirement, they can pull those additional reserves and still make that down payment and still make that transaction happen. The lender can come back and say, okay, we were initially at an 80% loan to value, house didn't appraise. The lender always uses the lesser of the two, from sales price or appraised value. We can increase the loan to value, and they may go into a situation where they now have private mortgage insurance.
Okay.
So that loan is seen as a somewhat riskier transaction because we don't have the collateral standpoint that we thought we once did. So those two options are what we see most, 90% of the time happening.
yeah, and I'll say, and to add to that is if I see an escalation clause in the contract when I'm actually submitting the file, I'll make sure, okay, do they have the reserves? Because I'm thinking exactly that, right? Okay, if this doesn't appraise, do they actually have the funds to be able to make up the difference?
Well, and that's a great point. That's where my mind goes, and that's where I've been, on a lot of these deals. I call the buyer, when I'm representing the seller, I call the buyer's lender. I'm like, I've got this $40,000, $50,000, $60,000 appraisal gap in here. This person's putting 20% down, but of course this may or may not shift. Do they have the ability to do this? So I'm wondering, is there something that gets put into this pre-approval letter or whatever kind of letter, is coming out to us that says, there should be, shouldn't there? Because the sellers need to be informed that they actually can do this.
Can cover the gap.
Can cover the gap.
And we've seen on several occasions where the buyer has been required to provide to the seller not only their pre-approval letter, but also their bank statement to demonstrate that they have the reserves necessary to back up what's on the contract.
That makes sense.
If their current house is for sale, sometimes they have to supply a net proceeds sheet to the seller so they can demonstrate, once again, they've got the ability or capacity to make up that shortfall.
Yeah.
Interesting.
That's
interesting.
Heavy stuff going on.
It is. Yeah. Hope you're catching all that.
Yes, it's a whole new world out there. If you haven't bought or sold in the last 6 months,
it's changed.
It's changed. Exactly.
It is changing.
Yeah. So we're here to, hopefully shed some light on all of that.
Gentlemen, any final words you want to share with us?
I think you pretty much covered everything. I'm thinking Mortgage 101.
Just the good stuff.
We're always available to answer questions whenever you have.
Tell everybody where to find you guys and how to find you guys. DJ?
Sure. You can find me online, grarate.com/DJ Sessions. I operate out of the Westchester office.
And for Bill Nutt, I'm here at the Coldwell Banker office in Mason on Deerfield Boulevard. Bill.nutt@grarate.com.
Sorry, I chuckle. Both of your names. I don't know why. I look at DJ Sessions. I'm like, are you going to bring your turntable?
Right, I need to.
DJ it up for us?
I need to add that to my repertoire. Absolutely.
But we do a great job of partnering with our real estate professionals every day of the week to really support your buyers.
Yeah, good guys, great professionals, and a lot of fun too.
And just if you are watching us on YouTube, I will have, and Dena will have the contact information posted on the slide at the end of the program.
Yeah, you can get a hold of these guys pretty easily.
Well, gentlemen, thank you. I can't tell you how much I appreciate your being here today.
You're welcome.
Thanks, guys. Again, we want to thank DJ and Bill for their expertise and all the great information that they shared today. I know that I personally learned a lot.
Oh, I learned so much.
Yeah.
So again, if you have further questions, you can reach out to DJ or Bill, or you could reach out to Dena or I, and we will help you learn more. Especially, we always talk about your specific situation and what will work for your specific situation.
Exactly.
Yeah.
All right. So what have we got in Real Talk today?
Well, in addition to getting a mortgage for a home, like conventional loans, we've talked about FHA, VA, USDA is another one. Those are all mortgage products that you would reach out to a lender for. There's other ways and other funding that you can use to purchase your home. Cash obviously is one of them. Not all of us have cash, but if you do, that is certainly an option. And while we don't know what the best choice will be for you, what we can be is the source of the source. So for right now, we're going to be the source of the source and just get your mind thinking about some other options to buy your home.
Exactly. So conventional loan is one way to go, but cash is another great option.
Yeah, and if you're paying cash for your home, it takes away the contingency of selling a home first. You can have it quick. That's the quickest closing.
Quick closing.
If you have, and by cash we mean liquid assets.
Right.
Like you could access that money tomorrow, and that's what we're talking about.
Right. So there are cash situations, obviously, where you might have to sell some assets. You have money in a 401k or somewhere else in another investment. And that's a little bit different.
Right.
Same but different.
Right. And if you are paying cash, that appraisal we were just talking about, you may or may not choose to have. And again,
Yeah.
Dena and I,
Yeah.
our recommendation, what we're going to do is tell you what's the good and the bad about those.
Exactly.
Yeah.
Exactly. Blanket loans are another way to go.
Mhm.
I've got a deal going right now with a blanket loan.
So, and
So-
we didn't see them for a while.
while. Yeah, I
and
agree,
a lot
I
of
agree.
lenders even kind of hedged away from them. But I have someone who, when they find their home, they're going to do a blanket loan. They have a ton of equity in their house, and
Exactly.
it's the right situation for them.
Right.
And it will allow them to buy their house, move in, do whatever they need, and then worry about selling the house.
Without having to sell their existing home at that time.
From my perspective, they have a house that will sell immediately.
Yeah.
So I'm not concerned.
Again, it's situational.
Yeah. There is the option of doing a Heloc, a home equity line of credit. One of the things that I suggest about this is you get it in line before you talk about actually using it to buy a home. But if you have that equity in your home, then that is an option. Now, one of the things I'll talk about, I'm going to throw in right now about a Heloc and a blanket loan and some other things, is they have a three-day right of rescission, where traditional mortgage is not. When you close on a home, you close on a home. So one of the things to take into consideration is if you're getting a blanket loan or a Heloc, you actually have to close that loan and not close on the house for 3 days during that rescission period.
That the buyer of your home has to close on their existing
financing
Heloc or their financing, then you have to make sure that enough time has built in there, because they have 3 days to change their mind, essentially. 3 days
so it won't be funded. Right.
Things
exactly. Won't get funded for 3 days.
It sounds complicated, but it's not.
But it's really not. Yeah, definitely.
Exactly. Other options are, like we mentioned in, when we're talking cash, is really just borrowing from other retirement accounts, your 401k, your Roth IRA, borrowing from an insurance policy. Those are all forms of cash, but they have to be basically proven in a different way. You have to be able to show proof that you have those funds, because they're not necessarily just liquid and available in a savings account waiting.
And if you are purchasing a home, Dena's right, you will have to show that you have proof of those funds and you have the ability to access them. Hey, my final one is gift.
Gift is
if
good.
Someone wants to gift you a home or the money to purchase a home, hey, you know what? It is a way to go. Sometimes there's people in a situation to help us. That's also private funding, probably goes under that too. But certainly, happy birthday. Here's a house.
Yeah.
A Wheel of Fortune the other day. It was a rerun, but somebody won a house. Yeah.
Wow.
I thought that was kind of fun.
Yeah, that's all good too. I'd love to win a house.
Well, especially because it was a Margaritaville house, and they chose one.
How fun!
I know, it was so neat.
Oh my gosh, that's awesome. Yeah. So you see, there are a lot of different avenues to go other than your conventional FHA, USDA type of loans. And again, once you start that process, Chris and I are happy to sit down, have a conversation with you, and we recommend that you talk to your financial advisor about what's best for you.
Because there might be some financial or tax, if you have an accountant, talk to your accountant, there might be advantages and disadvantages to the option that you choose. That is not our place to make that decision. We're just here to brainstorm with you and give you ideas.
Exactly. So when you're ready, give us a call.
Hey, that's all we have for today on House and Home Chat, Real Estate Real Talk with Dena and Chris. Remember, we are here to help you with your real estate dreams.
Thanks for joining us today, everybody. Take care.
Bye.
Bye.